Hello traders, welcome back to the channel. In this video, I'm going to do another quick recap of my trades from today, February 3rd, 2022. I took just one trade on Facebook. It was a winner. I took the win and decided to call it a day. So let's just jump into it. Today we came in, the indices were all down. SPY was down 1.37%, Qs were down 2.7%, Russell was down 1.1%, the Dow was down 0.3%. So the sentiment was bearish prior to the open. I was primarily watching the social media stocks like Facebook and Snap. Facebook today came out with disappointing earnings and reduced forward guidance. They said that they're expecting a decline in revenue from advertising, and the market didn't like it at all. In addition to Facebook and Snap, I was also watching PayPal and Square. Their stock has really been beaten up recently in a very strong downtrend. So if I was to go short, I thought that I would go short on either Facebook, Snap, PayPal, or Square. And I also was watching my regular stocks that I'm watching every day, Tesla, Nvidia, Netflix, AMD. So if I were to go long, those would probably be the names. If we look at the chart of the SPY, we bounced off this recent swing low. We reclaimed the 200 SMA, also reclaimed the short-term moving averages. I'm using 9 EMA and 21 EMA, but today we were gapping down again below the 9 EMA. As you can see on the hourly, this was the range where we've traded for quite a while. This is it. We broke out for about 3 days, and now we were pulling back. So I thought that after this move up, um, we were due for some sort of correction. I wasn't expecting a huge sell-off, but still, overall, my sentiment was bearish. If we look at Nasdaq, very similar situation, except it's gapping down even more than 2.5%. Plus, it failed to reclaim and hold 200 SMA. So tech stocks are more bearish today than the rest of the market, and that's partially why I was focused on shorting Facebook, Snap, Square, and PayPal, partially because of the Nasdaq and because the tech sector has been relatively weak recently. So off the open, I was watching Facebook. As you can see by the opening minute, Facebook already done 15 million in volume. This is, I mean, almost its average volume on the day, and the market just opened. I knew that probably there's going to be opportunity in Facebook today. In the first minute, Facebook pushed down, and then the second 1 minute candle started pushing up. I knew that if 1 minute opening range breakout pattern forms above this daily high, a lot of scalpers and short-term traders would probably go in and buy, because Facebook, at the end of the day, it's a good stock with high earnings per share, and they're a cash cow. Their cash position is insane. So here the break broke out, and as it started pulling back, I decided to go in short with 10 shares, risking about 1 point. Right now I'm risking just $10 on a trade, and as you can see, pretty quickly it started showing weakness. It broke out, but failed to hold. Next minute, it attempted again, but failed again. And pretty quickly, I decided to get out of 3 shares. It's my trading style. I like scaling out of positions. Facebook started pushing lower. I got out of another 3 shares at about 243.50. And at this point, I was in a driver's seat. It's really good when you're in a position with some wiggle room, already almost $2.50 in the money, and it starts falling again, testing the daily low. At first, I decided to put an offer. Sorry, to put. At first, I decided to put a bid right about the daily low because it looked like it wanted to test it. But then I decided to put it below the daily low, just above the whole number at $243.13, as you can see here, for 2 shares. And here it broke the daily low. And usually volatile stocks like this, they tend to test full numbers or half numbers, like for example, $242.50. As you can see here, there is a big wall of orders at 242, and all the traders see it, and probably everyone who was buying here now watches this number as their lifeline. Usually, when there is a big wall of orders and a price punches through this wall, you usually see some really nice follow through, and this what happened in this case as well. So let's watch. Let's watch. So let's watch how it happened. As you can see, the sellers are eating away at this price, and it flushes through almost, you know, almost 40 cents immediately. So I decided to get out of another 2 shares. At this point, I have just 1 share short, in the money almost 4 points. And it's pretty good considering that I was risking just 1 point. So as you can see, the risk reward in this trade was really good, even though in scalping you usually go for one-to-one. Um, Here I actually managed to make $24 while risking just 10. So it was really, really good setup, high probability setup on a bearish day, one of the weakest stocks on the market right now. Just took a bull trap because a lot of scalpers and long traders would get in. So I got into my short when their trade started failing. And as the longs are panicking, they start selling. That's when I like to cover. And Facebook ended up going lower, quite a bit lower on this morning. But as a scalper and as a trader who tracks my trading very rigorously, I can tell you that I'm much better when I'm scaling out of trades. I know that the conventional wisdom in trading is always to go at least for 3-to-1 reward to risk ratio. However, I found that for me, it's so much harder to predict larger moves. I'm much better at predicting small moves or medium moves. And when I'm scaling out of trades, I'm getting a little bit of both worlds. I'm able to take some off the table early on in case the price reverses against me. At least I took some money off the table. And if it follows through, I'm also able to capture more profit. And this is my style. I found that this works best for me. It doesn't mean that this is the best approach for you. Um, you have to track your trading to figure it out. But yeah, that's it. I like calling it a day when I had a really good trade in the morning because I already reached my daily goal, and there is no point to risk more to spend on commissions trying to make more. I found that um, I'm seeing most consistency when I'm able to quit while I'm ahead. And that's what I'm planning to do this month. I'm planning to quit while I'm ahead, and I'm really glad I stopped trading at this point. So I will just fast forward the rest of the recording for you so you can see how Facebook played out. Thank you for watching. I will be posting more of those trading recaps. So subscribe to the channel if you don't want to miss the new videos. Thank you for watching. See you in the next one.